Hello traders, Gary Wagner here. Just about 10:10 in Honolulu, 4:10 in New York. It is Wednesday, September 14th, 2016, and this is the Daily Report for Gold and Silver. We do have moderately higher pricing in the precious metals markets today, with gold trading up anywhere between $2 and $4.50 on the day, depending on what we're looking at. For spot, $13.2261, putting it up about $4.50. The low $13.13 and change, with a high of $13.26 and change. As I said, current print putting it up roughly $4.50. Now, COMEX Gold, of course, is trading a little bit higher, about a $4 premium. This is most active December, up $2.40 at $13.2610. The low $16.60 and the high $29.80 on the day. Silver having a nice showing today, up about a 0.5% or about a 7-8 cent gain. First to COMEX, 1905. With a low of 1884 and a high of 1917. And then lastly, we have spot silver trading up about 14 cents at $18.98 on the day. So traders, first, just a real brief note. You have probably noticed, or might have noticed, over the last couple of days, when you look at the background here in Honolulu, the windows seem to be highly opaque. No, this isn't green screen. They are painting the entire building that we have our studio in. And that being the case, it's also raining. So they were able to put up and seal all the windows in here, which was great, and then at the same time walk away from it when it rained. So this is how we've been left for 2 days. Everything should return back to normal in terms of the look of the studio by tomorrow. More importantly, let's take a look at what's happening in gold. Interesting, I've got a bar chart up, and I rarely do that, but the reason for the bar chart is I really want to focus on the highs and the lows of the market, because today's market move did hit a lower low right at around 1316.60. That was the low, and that comes out to about a 78% retracement. That, of course, is a retracement from these lows at 1305 up to 1357, and then our corresponding different areas, 23 here, 38, of course, 50, we passed that. 60, we certainly passed that, all the way to 78. And we certainly, at least for today, stopped here. Now, that's a pretty critical area. And the reason I say that is, I think I mentioned last week that I expect it to possibly go as low as a 61% retracement, but it's quite unusual to see it go to a 78% retracement and at the same time hold some sort of a bullish model. This is really, in terms of a technical standpoint, almost a line in the sand, because a break below this negates a lot of things. And what we're looking at, in essence, is the fact that we hit these lows at 1200. That's, of course, coming off of a rally starting at 1050 and moving up. We're labeling this as a wave 1, we're labeling this as our wave 2, and we're labeling our current market scenario as a wave 3. Now, the wave 3, without a question of a doubt, will have some sort of a zigzag pattern, meaning a stair step, I should say, in which we have a series of waves, and typically you'll either get 3 waves, 1, 2, 3, or you'll get a total of 5 waves. Now, in order to make that model make any sense, when you have these corrective waves, in other words, 1, 3, and 5 are always your impulse waves. Your corrective waves are always 2 and then 4. Now, there's a couple of rules that you want to follow, but one of the primary things is that when this market comes down, the retracement, in other words, how much of this impulse wave is it giving back, is typically either a shallow retracement at 38% or what we call a deep retracement at 61%. 61.8, of course, being the most important number, because when you take a look at the Fibonacci number sequence, simply adding 2 numbers and then taking the last 2 and then adding them. So 1 plus 1 equals 2, 2 plus 1 equals 3, 3 plus 2 equals 5, and so forth. The relationship between each of those numbers, in other words, the relationship between 3 and 5 is 618.618. That is the relationship between these fib numbers, and that's why 61 tends to be a really critical number. However, we absolutely broke through there. However, at the same time, the positive or bullish sentiment news is the fact that at least for today, we have found some support here. Now, in order to take a look at a candlestick pattern, obviously we need to convert this chart, which is exactly what I've just done. And as you can see, we've had 5 consistent down days in this market. Today, we absolutely hit that low. We hit the low precisely at this 78% retracement level. It did close nominally higher, which is why we've got a very small bodied candle with a range. It closed up about $2.30. That's what this little green box or rectangle represents, and our high here. It is not a piercing line by any stretch of the imagination. It's almost what's called an on-neck pattern, and an on-neck pattern is certainly, in terms of key pivot points or reversals, is one of the weaker of the two-day patterns. The only thing a little bit weaker than that tends to be the Harami, and the Harami is basically the same pattern, but the small body tends to be in the middle of the red candle that was just formed prior to the green candle. So what do we look for? Well, for some sort of a bullish trigger, obviously, we need to see a strong up day, a green candle with a higher high and a higher low. So, traders, silver is a little bit different. Now, silver up about 0.25%, up 5 cents at 1902. We're looking at COMEX futures. But in terms of technical levels to look for, that key level is still it's fib-based as well as bottom-based, but it still sits around here at 1850, and we are really right in a mid-range in between any kind of fib retracement point. So we've had that same kind of 5 days of sell-off. We're getting that same mild, meek recovery. Let's see what happens in tomorrow's trading, because that could give us the information necessary to formulate a really decent model that we have actually weathered this correction. But we're certainly not out of the woods yet. We need to wait another day to see if we get follow-through buying tomorrow. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.